You may have heard about making money while you sleep. While that is not entirely true because you still need to do something, in Forex it is literally making money while you sleep when you are a position traders. However, you could also lose if you do not know what you are doing. So yes, you need to start it by learning first, so stay tuned. Position trading is a long-term trading strategy that involves holding a position for an extended period of time, typically several weeks to several months or even longer. The goal of position trading is to profit from long-term price movements in a market, rather than from short-term price fluctuations. Advantages of position trading include 1. Lower stress and time commitment compared to day trading or scalping. 2. Potential for larger profits due to the longer time frame. 3. Ability to take advantage of long-term market trends and developments. Disadvantages of position trading include 1. Risk of significant losses if market conditions change unexpectedly. 2. Requirement for patience and discipline to hold a position for an extended period of time. 3. Need for a thorough understanding of market conditions and trends to make informed trades. Position traders typically use a combination of technical and fundamental analysis to make informed trading decisions. They may also use tools such as stop-loss orders to limit their potential losses. It is important to note that position trading is not suitable for everyone and requires a significant amount of research, experience, and capital. Position trading can be done in both Forex and stocks markets. Forex traders use position trading to benefit from long-term price movements in currency pairs, while stock traders use it to benefit from price movements in individual stocks or stock indices. The principles of position trading are similar in both markets, although the specific techniques and tools used may vary based on the unique characteristics and volatility of each market. Regardless of the market, it is important to thoroughly research and understand the market conditions and trends, as well as to have a well-defined trading plan and risk management strategy when engaging in position trading. The amount of capital you need for position trading will depend on several factors, including your trading style, risk tolerance, and the size of your positions. As a general rule of thumb, it is recommended to have at least $10,000 to $25,000 of capital to start position trading. This amount will provide you with sufficient cushion to absorb potential losses and give you the ability to trade multiple positions at the same time. However, if you are trading with a higher risk tolerance and a larger position size, you may need a larger amount of capital to sustain your trades. It's important to note that the amount of capital required for position trading may also vary depending on the market and the specific financial instruments you are trading. Regardless of the amount of capital you have, it is important to have a well-defined risk management strategy in place to limit potential losses and ensure the long-term sustainability of your trading account. This includes setting stop-loss orders and controlling your position size relative to your account balance. There are several ways to make money while you sleep apart from actively trading Forex, including dividend-paying stocks. Investing in stocks that pay dividends can provide a source of passive income. As a shareholder, you will receive regular payments from the company, even if you do not actively trade the stock. Real estate investment trusts, REITs. REITs are companies that own and operate real estate properties. By investing in a REIT, you can earn passive income through rental payments and property appreciation. Rental properties. Owning rental properties can also generate passive income through rental payments. You can either manage the properties yourself or hire a property management company to handle the day-to-day tasks. Online businesses. Starting an online business, such as an e-commerce store or a blog, can provide a source of passive income if it is set up and managed effectively. Peer-to-peer lending. Investing in peer-to-peer lending platforms can provide a steady stream of passive income in the form of interest payments from borrowers. High-yield savings accounts. Placing your money in a high-yield savings account can provide a small but steady return on investment, even while you sleep. It's important to remember that no investment is completely passive and all investments come with some level of risk. It is crucial to research and understand the risks involved before making any investment decisions. More of this in our next videos. Do not forget to subscribe so that you do not miss any of these amazing learnings.